What's up, guys? This is the Real Estate Professors back with episode 4. I'm your host, Sang Kim, with my man, as always, Ed Breaking Windows Park, the man, the myth, the legend. Today, we're going to be talking about analyzing a property here, a rental property here in Dallas-Fort Worth. Ed, why don't you kind of start us off by discussing what we're going to get into today?
Yeah, so the property that we identified is in Dallas, Texas. When we look at a property, we want to look at the cash flow, we want to look at the expenses, we want to look at the financing options, obviously the surrounding market itself, if it's a good neighborhood or not. And then basically from some rough aspects of the property, we can dive in deeper. So for today, we're going to actually run through a pro forma and sort of like a high level, and then get down into some of the weeds of how to actually analyze a property. And then Sang and I will debate whether we would actually step forward on this one.
But before we do that, make sure to hit like and subscribe, turn on those notifications for us. Stay tuned. Hope you like the episode, guys. So Ed, why don't you start us off by helping us get into this property and how we ID it and things that you should be looking for?
Yeah, so Sang, what I first did is I want to go on Redfin. I look for properties that are on the cheaper end because I know the rents in Dallas are most likely going to be under $3,500. So I want to be as cheap as possible on the house value to increase the ROI. I located a property at 3503 Durango Drive in Dallas, Texas, 75220. This property is listed at $295,000, 2-bedroom, 1-bath, 1,072 square feet. The conditions of the property, as you can see on the photos, are it's an outdated property. However, there is a tenant inside, so you know it's a livable condition. The tenant's paying $2,200 a month. It's month to month. It's a market tenant, which means they're not Section 8. They're not government sponsored, so that's a great thing. The broker said that the tenant is willing to re-sign a lease. And I think the property is also undervalued right now on the rent. So Sang could talk a little bit more. Right now it's $2,200, but Sang could talk a little bit more about how much the rent could go for if we re-signed.
So I just had my wife help us out with this. She pulled up a CMA report of the rental comps within a quarter-mile radius in that area. It's a pretty, I would say in Dallas, it's a very well-known area. There's a lot of traffic, it's an older neighborhood, but pretty much highway corridors, good location, smaller homes, also older homes. Some of the rents range from, there's a smaller home, pretty relatively close to there, 875 square feet, 3719 Manor Drive, going for $2,300 a month. Another one that's 1,200 square feet, $2,100 a month, probably a little bit more outdated. And then some of them can go up as high as $3,500 a month for a 2,296 square foot. There's also $2,700 a month, and that one is a 3-bed, 2-bath, 1,228 square foot home. It has a carport, doesn't have a garage there, so some advantages probably, but not. There are some disadvantages where this one does have a garage, I believe, and then some of these homes just have carports. So I believe the range is just kind of going to be based on how turnkey the property is, how updated it is. And so, Ed, why don't you kind of go over some of the details of the home for us?
Yeah, so the property, the flooring looks kind of worn down. It can obviously be sanded down and repaired. The kitchen looks outdated as well. You could definitely use a new kitchen. And then the bathroom also looks outdated, but you could do a very cosmetic upgrade to this and still place at market rents. So I think the property is very decent in regards to an upside. When you run the numbers, I like to use this program or a website called biggerpockets.com. A lot of real estate folks use some of the tools, but more importantly, connect with other folks in the industry. It's a very popular site. You might have run into it. They have a calculator called Rental Property. If you click here, I'll put it up on the screen. You can actually create and analyze a property through here by just clicking in a couple numbers. So what we did was we put in the purchase price, about 295,000. Obviously, we're going to negotiate that down. Purchase price, we estimate around 5,000 or 2%. I'm going to make it simple, so we're going to just bring a cash purchase, and then the monthly rent right now is 2,200. I think we can safely say that we can get 2,400 on this.
Yeah, I think we could probably raise it a couple $100 a month with a new tenant. We could, after purchasing it, we do a little bit of the value add, like we discussed last time, as we do with all of our properties. We could probably try to do a little lipstick work, a little tile, maybe a little flooring, maybe change out the carpet, and definitely hit the walls with some fresh paint. That could be, $20,000, $30,000 and up renovations tops. I think that potentially could bring our market rent up quite a bit based off of some of the homes that we're seeing in the area, because the location is actually really good. It's located it's located next to several highways. A lot of eating, a lot of entertainment in the area. It's not necessarily walkable, but it does offer a lot of easy access. So it's central in Dallas, which is a very positive thing, because it takes you a long time to get anywhere if you're not located right next to a highway somewhere. As me and Ed both know, it takes us a while just to even get to the highway here in Dallas. So Ed, why don't you kind of go over some of the more specifics of closing costs and some of the other things that we were mentioning earlier?
Yeah, so I typically like to just continue with the lease. So I'm gonna just put down, we're gonna bump it up to like 2,350, and then property taxes are set. Insurance is 216 a month. I like to be kind of conservative on the numbers, so I'm gonna put a 7% for repair and maintenance. Vacancy is always gonna be around 10. Capital expenditures around 10% of the monthly, and then if you have a property manager, I'll try to find an affordable one and get 8%.
I would say that the insurance is going to be much cheaper than that as well.
The insurance? Okay.
Yeah, so at $216 a month, I don't even think I paid $216 a month on my house and my houses.
So how much do you think this one?
That will probably, you'd probably get that around $100 a month.
Okay.
Yeah.
So this is what we're gonna go with real quick, and let's see what the numbers come out to. So the cash flow is gonna be about 1,000 a month, which is great. You can see here that the ROI is around 4%, and Bigger Pockets also gives you this graph here that it sort of projects out. So that being said, would you take a stab at this property, saying, what are your thoughts? And this is, of course, Dallas market. I'm not comparing this to Baltimore, but what are your thoughts about this property in particular as a rental? Would you think it's a good deal, average deal, not a so good deal?
Considering the square footage of the home, it's, I believe, 1,074 square feet. There are some cosmetic repairs that need to be done, not a ton. There's obviously a tenant already in place. And for this area, this is quite suitable. It's not too outdated. They have done some, it looks like the owner probably did some of the updating himself. So it's not terrible. It's not in terrible shape. The area's, like I said, a good area as far as access goes to some highways. I think the purchase price is a little bit high. They're kind of selling it as an investment property more so than just a home. I believe that in this neighborhood, you can probably ID a property a little bit cheaper and then stick a tenant in yourself to get a better return. As far as the home goes, Isn't in bad shape. Two-car garage. I was actually wrong about that. I thought it was just a one-car garage built in 1948. Pretty standard in this neighborhood. 275 per square foot is what it's listed for. I want to say you want to be closer to low 200s in this neighborhood as a purchase price. So I would say that even though on paper it looks like a deal that 4 or 5% return is not a bad return on any investment, depending on how long or how conservative you're trying to play. Because any investment these days, if you're getting any type of return, it's decent. But I want to say that we could probably get a better deal than this.
Okay. We just finished a analysis on the property in Dallas. There's some pitfalls that we have to consider. And saying, since he's done so many flips and new construction, what do you think about inspecting the property by a home inspector?
I actually think that it's very important and that everyone should take this part of it seriously. You should find a good, reputable inspector in your area. You shouldn't cheapen out on this process because there are some inspectors that go in the $200-300 range, which is very cheap. I would look for one that's closer to $400. These are the guys that are very thorough. I would look for word of mouth referrals instead of just looking on Google for the first one that pops up. They're usually not the best, and their jobs are very easy for the most part. They take a ladder, they go scope the roof, they go walk in your attic, make sure some of the minor stuff like you have insulation and things like that. But so they basically take a lot of pictures. They tell you a lot of like cosmetic damage that you can eye yourself as even a novice investor. But there are better inspectors that are going to get to the nitty gritty, as Ed likes to say. They're going to get to your plumbing. They're going to get to your foundation. They're going to get to your roof leaks. They're going to get to some of these things that like you can't identify yourself because you're not going to go crawl around in those tiny little attic spaces or top of the roof. And there's a lot of things that you can't eye yourself and that you wouldn't even be able to. This being a 1948 built property, I would invest some money here, and it could really save you a lot of money in the long run. Because if you don't do that, and let's say that you purchase a property, you're going to end up spending more money than you thought that you were going to actually invest in to begin with, and therefore it's going to then reduce your ROI, reduce whatever your cash flow is on this property. So you don't really want to get into that situation. You want to know how much you're spending and exactly what you're going to be putting into that property. So, and then that'll determine exactly how much cash flow you have. So you want to analyze all these things beforehand, and this is all a part of the due diligence phase that you really have to consider strongly when doing this. So I would definitely recommend getting an inspector. Ed, why don't you kind of evaluate some of the benefits and kind of go over after you've purchased the property and what you do with it after that?
Yeah, so for the Dallas market, as opposed to like properties up in Baltimore, it's more of an appreciation play. So I feel strongly that when the tide rises in Dallas for the next 5 to 10 years, like all property values are going to go up. So this one, I think the cash flow isn't as great, but I think the appreciation of the Dallas market far outweighs any market in the U.S. right now, including Baltimore. So I'm very confident that this property will increase 10, 20, 30% easily within the next couple of years. So I think it's, if you want to get into the real estate market right now, I think it's a great time to do so. In regards to day-to-day operations for a rental property, I believe a property manager is necessary. There's all sorts of things that a tenant might complain about, whether it be pest control, whether it be a small leak, dishwasher not working, some faucet breaking. We're all busy and nobody's going to go out there to repair it themselves. So you want to find a reputable property manager, or you could get home warranty and then try to manage it yourself. That's always an option, but you have to be conscious that you're going to get calls, any time of the day. So
I definitely wouldn't recommend the home warranty route, guys. They don't actually fix anything. They just kind of put a Band-Aid on it. Every time we sell a home, we actually provide home warranty for a year on the property, just in case there are some issues down the line. We want to guarantee our work, which if you're not actually building the home, when we do build the homes, we offer the home builder warranty. But if on flips, we just give them the 1-year home warranty. And sometimes they're just repair and maintenance guys, and they're all third party. So they're not actually one company that comes out that specializes in anything. They just kind of put in a phone call, something that you can do yourself. You really don't need to buy it. If you want to manage it yourself, which is difficult, it's time consuming. Not a lot of people know how to do it because you have to call a bunch of different companies. It's good to hire a good property management company for this reason. And it's also scary, guys, with some of these tenants there are also legal issues. So having a good property management in place will have you knowing your rights and where you stand with the landlord-tenant relationship as well on the legal side of things. So there's a lot of benefits to hiring a good property manager, whereas if you try to go out and do it yourself and pay for these kind of cheap warranty companies, they're going to mess up your property in the long run, and you definitely don't want to be putting in that type of money into your property over and over again. You want to get it done right the first time if you do have maintenance issues. Is there anything else you'd like to add to that, Ed?
No, I wholeheartedly agree with you saying
Oh, thanks, Ed.
on every aspect of this.
Oh, thanks. Okay, well, I hope you guys enjoyed this video of us analyzing a residential rental property. I hope this helps you guys identify and kind of gives you some type of clarity in some of these programs that we're using. Make sure to go check those out. They're available. They're free databases. Bigger Pockets is a great resource for a novice investor. They're even great resources for seasoned investors as well, because there's a lot of information out there, guys, and it really helps. It really helps. The more information that you have, it helps with your due diligence. And so, once again, we hope that you like this episode. Make sure to hit like and subscribe on your way out. I'm your host, Sang Kim, once again.
I'm Ed, breaking Windows Party.
That's